All right, time to see what's on the radar for Bryden Teich, CIO and Portfolio Manager at Avenue Investment Management. And one thing that's on everybody's radar, Lululemon. Everybody's talking about it one way or the other, it feels like. And you're liking it right now, even despite everything that's kind of unfolding.
Yeah, well, as we were just saying before we aired, I think it's an interesting business from the perspective of it's obviously had a significant decline from the highs from a few years ago. I think it's still down somewhere like 65%. So you've had expectations for the business completely collapse. At the same time, last year they did have, I think on the 12-month basis, they had record revenues. It continues to be very profitable. I think there's enough things now positively inflecting for the business, or another way to say it is that more than, or all of the negative information is more than already priced in and factored in. And you've now had insider, or Chip Wilson come out, founder, essentially requests or suggests that the board needs to be changed. The CEO is leaving. You have Elliott Management who's come in as an activist trying to motivate the next CEO choice. So all of those things are starting to be incrementally positive. And at the same time, the valuation is somewhere 12, 13 times earnings. So expectations are really low. It's a super profitable business. All Canadians know the quality of the majority of their products. And at the same time, with the ability for them to do buybacks at this kind of accretive earnings multiple, that's attractive. And sort of on top of that, critically important is they don't have any debt. So you've got a strong balance sheet. So there's not a risk of Lululemon going bankrupt. They've always had a really clean balance sheet. So to buy a company with a good brand, very profitable, and all of these positive dynamics happening at a multiple like this on earnings, it doesn't really happen that often. Things could still get worse from here, and retail is very hard, so it's not to discount that. But I think at this share price, our view is that more than a lot of the negativity is already priced in, and probably too much so.
And with Chip Wilson being so vocal, and you've got Elliott, sometimes that's a bad thing, but can it be a good thing as well? Because sometimes it can stir the change that maybe the company needs.
Yeah, I think that, and maybe it was November or December, Chip Wilson did a one-page ad in the Wall Street Journal going through his laundry list of issues with the board and management. And essentially, he says, essentially they got away from product development and got too focused on this sort of Wall Street trying to time the next quarter. And really, for a retail brand or consumer brand like Lululemon to thrive, it's all about the product, and it's about the quality that you're providing to consumers. And if you can embed that in your consumer experience, you're going to have a good business.
Okay.
And I think they got away from that, and I think they're going to go back to that with it.
All right, I want to get the other one in. Toromont. What are you liking about that?
So Toromont is one that we've owned several years, but I think it was very much on this theme of Canadian infrastructure investment. And I think that our view is that there's going to be continued a positive direction in terms of investing within Canada, whether it's on the energy side, critical metals, infrastructure projects through Ontario and Quebec. Caterpillar has had tremendous results the past few quarters, and Toromont is the largest dealer in Canada and Ontario and Quebec. And so as goes Caterpillar, goes Toromont. Yeah, and so I think that Toromont continues to be a really great business. And I think that directionally, there's now a much longer runway of infrastructure investments in Canada that is increasingly likely. The shares might be already reflecting all of that positive stuff because the shares did do pretty well last year. But as a long-term business, I think this continues to be a Canadian company that we really like.